Good afternoon, this is Rick. I'd like to share this video on the trade plan that I've created for the Australian interest rate statement release. Just a reminder, this video is purely for educational purposes and it's not a recommendation to trade this or any other trade plan. Trading in Forex is risky and past performance does not guarantee future results. Before trading, please perform your own due diligence and research, as if you decide to trade, it is solely your responsibility. So let's talk about what we have in front of us here on this trade plan. With all that being said, October 1st, 2012, Central Standard Time, USA, 23:30 hours. If you're Eastern Standard Time in the United States, it's October 2nd at 0:30 hours. If you're somewhere else in the world, please adjust the time accordingly. The pair we're going to look at is the Australian USD. And very important, we're only going to trade this plan with a release that equals no change from the previous versus the forecasted versus the actual. Previous equals forecasted equals actual. If none of this is true, it is a no trade. Do not trade if there's any difference between the previous, forecasted, and actual. We're going to load the 1 minute chart and pre-release plot the high and the low back 3 hours. We're going to keep that 1 minute chart up and wait for the release. At the release, note the high and low of the 1 minute release candle. If the first candle breaks the previous high or low, it now becomes a new high or low for the breakout. We're going to trade the breakout of the high-low. In some cases, this breakout can and has occurred in the 2nd minute candle. Make sure you set up your trades prior to the release so that you can react quickly to this breakout. Again, do not trade the 1st minute candle. It is used and can be used to set the new high or low breakout line. If the breakout does not occur within the first 2.5 hours, do not trade. Stop 25 to 30 pips. Here we have some data as it relates to what has occurred in the past. August, July, April, March, October, September, August of 2011. Here we have listed the results of those trades. 6 total trades, 5 wins, 0 loss, 1 no trade. Actually, we have a break even in here now. Results on the date with any deviation. We did not trade these. When we see these deviations, this particular currency pair becomes very volatile and is very difficult to predict. Alright, let's review some charts. September 3rd, 2012. Pre-release high, pre-release low. The breakout of the pre-release high tells us to buy. Profit target 30 pips. Of course, we need to show the bad with the good. Here's August 6th release. Pre-release high, pre-release low. Here we have a breakout, 15 pip move up, down, and if you stayed in this trade and didn't move your stop to break even after you moved up 15 pips, this would have been a loss for you. Here we have the July 3rd release. United States that evening is probably not a great day to trade, as the 4th of July Independence Day is right on the heels of this. So here we have, after 3 hours, we had no breakout of the previous high, previous low, no trade. Here we have April. You may ask what happened to May and June. In those particular months, we had instances where the previous, forecasted, or actual had a difference. Therefore, they were no trades, and I did not show you those charts. Here we have the pre-release low, pre-release high, breakout right here, and a nice profit. Here we have March 6, 2012. Pre-release high, pre-release low. We had the breakout of the previous low, so giving us a sell signal, and here is our profit zone. Here we have October 31st, 2011. Here is our pre-release low, pre-release high, post-release low. Here we had the 1 minute candle actually break that and come down. We broke below that right here, like 3 minutes after that. That's a sell signal. There's our profit zone. I recommend that you go back and look at August 2011 as well as September